Hey everyone, Anthony Venuti here with InTouch Mortgage Solutions, and on this episode we're going to be doing the monthly mortgage update for the month of May. Where were rates just a few months ago and where are they headed? What you need to know, stay tuned, you don't want to miss it. Well, the Toronto Maple Leafs have made it to the second round of the Stanley Cup playoffs, and this guy right here could not be more excited. 19 years I've waited to watch them play again in the second round. Hopefully we can advance to the finals and maybe win the Stanley Cup. Let us know in the comments section below if you think Toronto Maple Leafs can actually make it happen. And let us know who your favorite Toronto Maple Leafs player is, whether it be past or present. Let me know in the comments sections below. But let's get into the mortgage rate update for the month of May. And we're going to take a look at what's happened over the last few months with interest rates, what is happening, what is some of the major push and pull factors that we should be paying close attention to, and what it could mean for Canadians who are looking to get into the housing market or renew their mortgage. So first and foremost, as we get through the month of May, we just started with some pretty devastating news out of the US with another regional bank collapsing, First Republic, basically being taken over by receivership by the FDIC, the Federal Deposit Insurance Corporation, basically bought out by JP Morgan, one of the biggest banks in the US. Arguably some questionable trades there when it comes to regulations about banks gobbling up other banks. But I think there is some major headwinds ahead in the US when it comes to these regional bank failures. And with the US Federal Reserve's most recent monetary policy decision, as we start to see the movers and shakers in the market, those stock markets and bond traders, sort of digest what is happening, well, obviously this will have an impact on where interest rates are headed, especially here in Canada. So we'll be paying very close attention to that. Later this month, we're also going to get our CPI numbers, those consumer pricing index, the inflation numbers. Will inflation have come down a little bit more aggressively? And will that mean that the Bank of Canada can continue to hold its policy rate decision at 4.5% steady? Will they have to cut? Will they have to increase? Just as a side note, there has been conversations that the Bank of Canada was actually on the fence on whether or not they should have increased policy rate. But obviously, we'll find out more on June 7th what the Bank of Canada decides as they digest the data from the CPI numbers, employment, obviously what's happening with growth in the economy, all these things, household indebtedness, all these things will be a major factor on June 7th. OSFI also concluded, as we've discussed, their decisions on their what is going to happen with the regulations. Now they're just sort of, I guess, putting everything together in writing. And we sort of heard from Peter Rutledge, the leader, the head of OSFI, the Office of the Superintendent of Financial Institutions, that variable rate mortgages continue to be a very sore spot for him and the regulators, all those federally regulated banks. As we've discussed, those amortizations that are jumping well over the 30, 35, and 40-year mark, and what it could be doing to Canadians who are kicking the can down the road when these mortgages have to snap back from their high amortizations back to their normal, 25 or 30-year amortizations. Obviously, we're going to find out in due time exactly what will happen there and what other potential changes we could anticipate from OSFI. And if that's something that interests you, we invite you once again to make sure you're subscribed to the channel. Don't forget to hit that notification bell so you can get notified every time we post a new video. Don't forget to like and leave a comment. And if you found this video helpful, don't forget to share it with someone. Helps the YouTube algorithm, helps get this content out to as many Canadians just like yourself. So with all that being said, there's a lot of things in the month of May that we should be paying very close attention to. We'll be talking about it on the channel, but let's start by looking at where the rates are for the month of May and where they were in the previous months. So as we start to look at these numbers, I want to just quickly go over some of the key components when we talk about insured and insurable mortgages. Very high level, we've talked about this several times. And insured mortgages, if you're buying with less than 20% down, you as the purchaser are paying that default insurance premium, and the maximum amortization is 25 years, and the purchase price has to be below $1 million. And obviously, this is something that's very important to Canadians who can get into this product and the qualification. Then there's an insurable product, which is very similar to an insured purchase. Basically, at this particular crossroads, while you can put 20% down, you can also take advantage of a 25-year amortization, maximum 25 years, Purchase price still has to be below $1 million, but because you're putting 20% to 35% down, you get to take advantage of those better rates. And the reason why you get those better rates is because the bank in themselves, not you the purchaser, actually pays the default insurance premium on your behalf to get the client the better rate. But there are obviously strings attached when we look at insured and insurable products. Across the board, there's what we call fully optioned mortgage, full frills, basically giving you all the bells and whistles. That means prepayment privileges. You get to basically look at refinancing, restructuring that mortgage if you're taking a fixed. Yes, there's a penalty, but generally with these full optioned products, the penalties could be significantly less than if you're taking a discounted rate mortgage, where you might be saving a little bit on that rate, but what you're stripping away from a fully optioned mortgage, you're actually holding yourself tied into a discount rate mortgage, which means you maybe have to sell your house to get out of the mortgage. You cannot refinance that mortgage. You have to have a bona fide sales clause maybe to sell that. If you refinance, you're stuck with that bank. You're stuck with whatever options they give you, and you might also be faced with less prepayment options, meaning you can't contribute annually or increase your payments as much as you could if you took the fully optioned product, the full frills mortgages. So there's a difference between the fully optioned and the discount rate products. And if you have questions about that, you can always feel free to reach out to us here at InTouch Mortgage Solutions. And then we talk about conventional mortgages. Well, those are for your purchases and refinances. Let's say you need that 30-year amortization. Maybe the purchase price is over $1 million. Well, then you have the option to take on a 30-year amortization or less, depending on your qualification. But the rates are generally a little bit higher because now the bank has the responsibility to take on that mortgage on their balance sheet, and it is not savings to the client because of that. So there's no insurance premiums added. They can't insure that mortgage, so they have to keep it on their balance sheet. So let's get into these rates and see where exactly we were just a few months ago. So insured 5-year full option mortgage on a 25-year amortization in March, we're sitting around 4.69%. In April, we saw them come down a little bit to around 4.49%. And now the month of May, we're at 4.44% for a full optioned mortgage. Now looking at the insured discount mortgage, well, those were around 4.69%, obviously in and around that territory. There wasn't a lot of movement in the month of March. You may have found a couple of variances, but in April, we saw that come down to 4.44%. And now for the month of May, we're at 4.34% for a discount rate mortgage. Now looking at an insurable mortgage, well, that's basically anywhere from 20 to 35% down, depending on what you're putting down will determine your rate. And the full optioned mortgage will look at 4.74% to about 5.19% in the month of March. In April, that went to 4.44%, all the way up to 4.99% with the least amount down. And then for the month of May, 4.34% to 4.59%. So obviously, 4.34% for an insurable product means that you were putting down 35% or more down, or basically a 65% loan to value. Now, switching into the conventional 5-year mortgage, that's a 30-year amortization. In the month of March, we saw that around 5.19%, dropped in April to 5.09%, and now we're hovering in and around the 4.99% for a conventional 30-year mortgage, which is actually fantastic. Prior to March, I mean, these were at 5.5%, so we've seen them come down significantly, and this is good news for those Canadians who might be looking to renew their mortgage. So an insured, now we're going to switch into 3-year. Insured mortgage full option in the month of March was around 5.29%, came down to about 4.99% by the end of April, and now at the beginning of May, we're seeing those around 4.89%. An insurable 3-year, obviously depending on the down payment, if this is for a purchase, obviously 5.29% to 4.99% in April, and down to 4.89% for the month of May. Now, obviously, you'll see that those two are very close. Obviously, some of those products may vary right now. Some lenders have passed on all these discounts to the consumer, to the viewers out there. If you're wondering what is happening there, some of those rates might go as low as 4.81%, and it depends on the particular lender. So having that conversation with your mortgage professional, what promos are being offered on those 3 years. Now, you may notice that we didn't do a 1, 2, or 4-year. If you're interested in the products that we're not talking about in this video and you want to know more about those rates, well, in the description box below, you can download our free mortgage app where you can play around with those calculators, those tools, those refinancing calculators, understand what those GDS and TDS numbers look like for you, income required, and what those land transfer tax calculations could look like. You can download it in the description box below. But now switching into the conventional 3-year, well, this is probably where we send a little bit of a swing right now. And obviously these are some of the posted rates. We saw them from 5.44% in the month of March, dropped to 5.24% by the end of April. And right now at the beginning of May, we're at 5.14%. And you'll notice that the variable rate mortgages haven't moved too much over the last little while. You know, you're looking at 6.35% for a variable and around 5.6 for that discount variable on a 25-year amortization. Basically, you know, if you're looking at these particular products, you're at about 5.60. Now we saw some variable rate mortgages actually come down a little bit, although they have stayed relatively, you know, status quo. They haven't really moved, very static. You know, some of the best rates that we're seeing on a variable right now across the board is around 5.55%, prime being 6.70, obviously minus 1.15%. Is still relatively high. So if you have questions about those variable rates, and if you're in a variable rate looking to switch into a fixed and you want to have a conversation about what those options look like, remember, if you have a mortgage renewal coming up in the next few months, before you sign that renewal, you should always talk to a mortgage professional to make sure that you're getting all the options available to you. You don't want to basically walk over the dollars to pick up the pennies. Sometimes when it comes to these mortgages, even these discount mortgages, obviously you have to understand what you're giving up in order to get that little bit off the rate. And sometimes, depending on the size of that mortgage, it might not be a huge amount of money that you're actually saving. It may end up costing you more money, especially if you look at interest rates and where they could be headed. If you think that interest rates are going to be headed down and you're renewing at a higher rate and you want the option to potentially get into a lower rate, well, you want to make sure you're with a lender that's going to allow you, A, to refinance and get out of that mortgage with the least amount of penalty, and it's going to give you the option to do that, especially if you're looking at those prepayment privileges, something we talked about earlier on in the video. So there's a lot of things that you as a viewer or consumer, someone with a mortgage, should consider when it comes to selecting the right product. It's not always about the rate, it's about the product, and if that product can adapt to your needs as an individual and as a household. So we'll leave the video here, hoping that everyone enjoys the Friday and their weekend ahead. Remember, go Leafs go. Thanks for clicking, and we'll see you next week.